biggest thing is it's hard for people to believe that there's no pitch coming on my end of things. I don't believe in pitching or selling. I believe in adding value. And really, my goal is to get value out to the institutional and family office space so that they can hear other important investors' points of view. That's all we ever do at Family Office Club is guys will get up on stage, talk about what they're doing, and it's just about sort of mutual insight and camaraderie. It's rare in the world because everyone's trying to sell you something.
No, I totally agree with that. I learned pretty early on, my early mentors were just very strong about, the law of reciprocation, invest in relationships and maybe transactions follow. But if you spend all your time on transactions, you'll never build relationships. And I really believe that.
Yeah, 100%. I think that really, this is my hypothesis, but I think that sets apart the 1% from everybody else who is almost blind to that concept because just, everyone is pitching all the time.
Yeah.
hmm Well, so I'm going to start on a selfish note. I'm an author, you're an author, but you're a best-selling author. How did you hit Amazon best-selling status?
Well, it's probably more impressive sounding than it is. My publisher had I known him my whole life really. He sadly passed away about a month and a half ago, but he was always ahead of the curve on technology, just a bleeding edge guy. He was in the printing business in the 80s and he accepted his first file for printing online in 1987. This is before the World Wide Web and all that. So he had always been a real progressive thinker and had all the tools and all the widgets and all the ways to get stuff done before anybody else figured it out. He was early to AI. He and I had a standing call every Friday morning just to talk about what was happening in AI, and that started 3 years ago or something before it really got to be, ever present, front of mind for everybody. But he published the book, and he just had, I really, it's magic voodoo to me. I don't know. He had some way to get the book out into I guess he has sort of a loose cooperative of networks where they would agree to help kind of cross promote books they were behind. And the interesting thing about Amazon is that you only have to be a bestseller for a day, and you're an Amazon #1 bestseller. And key to that was picking the right categories. Like my book could have appeared in whatever 20 categories. He picked three where he thought it was the softest competition, But in both of those, in two of the three categories, I outsold Michael Lewis's book, um, Fast Boys, or what the heck was that called? It had to do with the hyper frequency traders, Flash Boys. That's what it was. For
Okay.
one day or 2 days, I outsold him in two categories, and that made me an Amazon #1 bestseller. So
Well, that's a great hack, actually.
it was. That really was what Frank was all about. He just really knew
Nice.
how to hack stuff. Yeah.
So on that did Frank function as something of a mentor to you as well?
I mean, we were peers. We went to college together. He certainly taught me a lot. I would never probably give him the satisfaction of calling him a mentor, but he was an important dude in my life and incredibly brilliant and incredibly creative, and certainly learned a lot from him and never
Hmm.
questioned anything he recommended we do.
Hmm. Love that. That's great.
Yeah.
Um, so, okay, tell me about your work in the family office space and like what's your lay of the land in the family office world as it relates to what you do?
When I say we, I have a business partner for most of the last 20 years. We've been career investment bankers, investors, and serial entrepreneurs, primarily operating in the small public company space. So these would be microcaps, small caps, the thousands of companies that nobody's ever heard of, but that trade, have a NASDAQ, symbol or a New York Stock Exchange symbol. And in those,
Hmm.
we both have been doing that for over 35 years. And in those 35 years, we've co-founded a dozen companies. We've invested our own money in dozens of companies. We've put our own sort of deals together and created what my partner calls financial alchemy to kind of one plus one makes three and merge assets. Again, almost always using a public company vehicle to do certain things. I was an equity analyst and wrote this best-selling book about stocks. It's called Microcap Magic, why the biggest returns are in the stocks you've never heard of. And the principle thesis there is that where you have poorly understood or poorly followed stories, you have inefficient trading. And in inefficient trading, you get inefficient pricing. And in inefficient pricing, you can find some unbelievable discounts to sort of the intrinsic value vis-a-vis a company's larger peers where they trade. And the bet is that the market always catches up to the story or a competitor recognizes that discount and acquires that company. And that's what I had done. In the mid 2000s, I had been basically writing up research on companies that I thought were either going to be recognized by the market sooner than later or get acquired. And it was, quite a good thesis, and it got, generated good results, which led to the request that I do this book. In that time, we've also been fund managers and all this. But the through line through all this is I'm a licensed investment banker who advised companies on growth capital, primarily among small publicly traded companies. We've done hundreds of deals. We've done billions of dollars. And these days we're often investing our own money in deals, and that kind of buys us a seat at the table with these small issuers that allows us to then lend our advice, our resources, our experience, our expertise to help close that gap between what we see as a discounted price and what we see as a fully priced for that story, and getting to work on sort of creating our own exit. And when we do that, we have co-investors, and those co-investors are family offices and ultra high net worth individuals that come in side by side with us on deals. We don't do a fund. We don't even do SPVs. We just do, hey, we're doing this. This is why. Here's the thesis. Here's how long we think it'll take. Here's what we think the outcome could be. Does that resonate with you? If so, come along side by side with us. So that's where we touch the family office guys. And then occasionally, because of those relationships, sometimes they're stuck in a deal that's publicly traded or private and wants an exit of some kind. And they come to us and say, hey, have a look at this. We like it because of X, Y, and Z. How do you think you could help?
Oh,
Yeah.
so they're at that instance, they're asking you to buy them out of their position.
Not even, I wouldn't call it buy them out of their position, but we've got lots of guys that are in deals that are kind of in our sweet spot where maybe they've got let's say a guy's got $100 million he's got allocated, but he might have 3 or 4 or 5 million dollars in these smaller names, the kind of these where we play these small public companies, and
Mhm.
they don't know what to do. They don't know what they're stuck. The deals are maybe still high quality, but management doesn't know what they're doing as a public company. They don't know what pitfalls that are facing them, or they don't know how to overcome some adversity that is very unique to that microcap space. We know how to do all that, and so we'll regularly get a call that says, "Hey, I'm in this deal called XYZ. The symbol is this. Will you go have a look and see if you think there's anything there and that you can be helpful with, just to help the stock basically get more visible so that it trades better, so that it prices better, so that they're not so underwater in a position they've had."
Okay, so they're calling in your research and your expertise to help that stock
That's right.
actually.
That's right.
Okay, so okay, we're talking public versus private. I
Yeah.
actually know more about private in this regard than I do public.
Mhm.
But if it's public, I can go buy this ticker on the
That's right.
stock exchange. Okay.
That's right.
Um, so how does it work? Obviously, you're not doing a fund with GPs and LPs because that's private. Um, how, is essentially what a family office calls you in for is what you just mentioned for your research? Or how do you say, hey, FO, let's go in on this deal together? How is it together? It's a logistics question I'm asking. How is it together
Yeah.
if that fund, if that ticker can be owned by you and the FO and 100,000 other people out there?
Um, well, I'm thinking of one in particular where this family office was in this deal. It was in retail. It was they had $6 million in it. And the CEO they just had no idea what they were doing as a public company. The company shouldn't have been public, but it was. The family, again, probably because they have this very private company sort of venture capital or long-term view of the investments they make. They said, "Oh, this is a good company with a good market opportunity and a good management of the business." But that doesn't make them a good manager of the public vehicle. And that's incredibly common, is that public company CEOs, they don't recognize that whatever their incredible widget is that they sell and the incredible market opportunity they're exploiting, that's one product they sell. They now have this other product to sell, which is this public stock. You have to market it just like you market your widget. You have to find the buyers. You have to tell your story to the buyers. You have to constantly communicate with the buyers. You have to constantly lay out expectations and deliver on those expectations with the buyers so that you create a real market in your stock so that it trades right and it prices right. And none of them know that. And not only do they not know that, but once they figure out that once they do figure it out, they don't know how to do it. They don't know how to do that. So that's where we can be, where we can, and we regularly step in to be helpful in that. Sort of almost like an adjunct to the C-suite, specializing in the capital markets piece of their business, which they've never had to deal with before as a private company, if that makes sense.
It does, I think, because the way that I'm relating this is to, so I'm in the Bitcoin space. I know Bitcoin like the back of my hand and all of its adjunct subsequent players, one of which is Strategy and Michael Saylor. I don't know how familiar
And
you are.
I've known Michael for 30 years. We were in the same
Oh, you know
building,
Michael
and
Saylor personally.
I do. We were chasing around the
Okay.
same girl in 1990, whatever it was.
And what happened there?
I'd rather not say. But
Okay.
yeah,
Well,
he and I were in the same building for a while, and we were members of a club, executive business club there in Tyson's Corner, Virginia, back in the day. Yeah,
okay. Fantastic. Love that. So,
yeah,
okay, what Sailor does is he essentially, and the way that you're framing it helps me to reframe it. He's essentially going on TV all day, every day, telling the story of what strategy is doing. Would you agree
that
with
is
that? And
correct.
if so, okay,
Absolutely.
so this is what you're training microcaps to do. It's never occurred to me that any company should go and tell their own story. I didn't even place that in that way of thinking.
Well, they have to. And it's the same with even some larger family offices, especially they get sort of blocked up. They get kind of they get blind. What's the word? They have a blind spot in that they're always thinking of the market in terms of these large mega cap names and this JP Morgan level of capital markets. And oh, as long as you're high quality and as long as you perform, your stock's going to do great. Not the case in the microcap space
I mean, I
because
would say
they're
not the case in the hedge fund space as well. You can get
Mhm.
50% a year and people aren't still going to just flock to your fund automatically. But go ahead.
Yeah, well, yeah. I mean, that's it. Is that these names, we call them names. These symbols, these tickers. These companies are too small to attract institutional capital, right? If a company's got a $50 million market cap, there's not a institution on the planet that can even buy it if they love it. And so these smaller names are by definition or by necessity, they're retail stories. So it's a heavy lift. I mean, you got to go really market your stock. You got to have a budget. You got to have people. You got to have resources. You got to go out there and tell the story. Um, the ones that know are at every conference. There's 100 of these microcap conferences, and they're at every one pitching. Like the CEO is on the road 100 days a year pitching the story to a room full of small investment bankers, small, sort of hedge funds or sort of little portfolio managers that might have $5 million or $8 million because they can buy these names. But
Mhm.
the institutions can't buy these names. Royce Partners and Fidelity, and they can't buy these names. It's just they just cannot do it. And so you have to grow into that, and that's a skill and a knowledge, that they just don't have.
Very interesting. Yeah, the
Yeah,
notion of um, I have a friend who's really good at the wholesaling side of things of a fund, particular funds to financial advisors and RIAs. And I brought him in to pitch a given fund to a couple of clients I had one time. And something that he said at the end of the sort of pitch was that'll stuck with me and I'll never forget it. He said, "Thanks for letting me tell the story of this
that's right.
particular fund."
That's
Yeah,
right.
and I thought, how do you tell a story on something that's technical like this? I just had never thought about it in those terms. But looking back, that's precisely what he did. I don't know that anybody wants to buy the technicals of, let's say, Bitcoin. Like the fact that there's 21 million Bitcoin and that's all there will ever be. So what? You need to hear it inside of a story and a context so that you understand why it matters to you as the investor. Would you agree with that?
Yeah, I do agree with that.
Okay.
Yeah, it's um, it's the old I'm trying to just think about all my days training salespeople. Uh, some people focus just way too much on the features of something and not enough about the benefits, right? It's confusing
Mhm.
features and benefits. There's features of Bitcoin, like a 21 million coin cap, and the halving and all the different things that Bitcoin has. Those are features. You got to tell it in context of benefit. What's it, like you said, what's it mean to you? Why am I going to make money with this? Nobody gives a S, nobody gives a darn about what your business does or what, how big the opportunity is. It needs to be translated into, if I take action to support this stock, what's in it for me and why?
Mhm.
Yeah.
Yeah.
And you got to tell that
Why is that?
story just ad nauseum.
Yeah. I mean, that seems like that's the secret of marketing anyway, just sort of in a nutshell.
Yeah.
Yeah. That's great. Okay, so um, you're not simply working with family offices per se, but
No.
you're going into deals with them. Like, what's a day look like for you? Who are you working with? What products and services are you offering per se? And then who are you working shoulder to shoulder with that's working with you?
Yeah, it's an interesting and sometimes frustrating answer is that it depends on the deal. Sometimes we're on the buy side, right? Which means we're working with, we have a family office in Florida right now. We're working with them, working on behalf of them to identify certain, they have very specific parameters within public companies that they're looking for, and they're counting on us to uncover these, communicate with these public companies that we have an investor relationship that would like to sit down and talk to you about X or Y. And so we're on the buy side in that case, but we're usually on the sell side. We're a public company. Is in trouble. They've maybe done a bad financing that they didn't understand, and somebody took advantage of them, and now the stock's way down. And how do we get out of this pit of despair? And so they come to us, and and sometimes we find them, but they're usually referred to us by people who know our reputation and know the kinds of things we do. And we dig in and we look at it. And we say, yeah, we can help. Or sometimes, not too late. Sorry, can't help. So we're working, that's the sell side. We're working the sell side. Sometimes we're working the buy side sometimes. And then sometimes we're just trying to create bespoke opportunities um, by just keeping sort of surveillance on everything that's going on in the space and seeing where the opportunities may be and try to go make transactions. Find a company where we're this private company and we have this public company that's in a related space. And boy, the synergies there would be interesting. And now we're trying to pitch a merger transaction or something like that. But with respect to now I'm trying to remember the original question, Eric. Um,
I am
where do we?
too.
Yeah, yeah. I apologize. I got long-winded on that. It was something
No,
about
it's
how
fascinating.
do we actually deal with family offices? Um,
Yeah, and who are you working shoulder to shoulder with outside the family office space? Because I think what I'm hearing is your service and expertise is going to attract several spokes of people, FOs being
that's
one
right.
of them, but
That's right.
really,
That's right.
okay, so it's really anybody who wants help in the microcap space to buy into this particular company, and they want you to help them help that company to become a better investment. That's why it makes sense for them to put capital in.
That's right. I'm thinking of one family office we have where almost all the family offices we deal with, their wealth is in real estate, which is fairly common. But I'm thinking of one in particular where they have 1.5 billion or something in real estate assets, and they have 150 million in non-real estate assets. They have $3 million in stuff we do. Like that's the ratio, right? But they
Yeah,
recognize a couple of things about what we do that is unique and interesting and frankly fun in a way that nothing else they do is, which is
yeah,
almost everything we do is direct investments in these companies so that they know that the companies, excuse me, the capital is creating jobs, it's supporting innovation, it's going to work directly. It's not just, you know, trading, shares of paper, pieces of paper back and forth between people and hoping that my paper is worth more later. They get that, but they also get the satisfaction of knowing, wow, I'm supporting this innovation. I'm supporting this phase 2 clinical trial, or I'm supporting the development of this technology that's going to help with the environment, or whatever their particular sort of interested, their sectors of interest are. Uh, but he's got like $3 million for this. He's got 250 here, 500 there, 250 there. Uh, but he also knows that rather than like an angel model or a venture model or even a hedge fund model where it's put your money in for 7 years and hope it works out, hope some percentage of them work out. Every one of our deals is liquid. Right. 12, 18 months is like a lifetime. That's like more time than we'd ever want to be in a deal, in part because we're finding them so much cheaper than they should trade, and then getting to work on closing the gap between where they are and where they should be. And so our investors are typically getting better valuations and shorter liquidity windows, and having the sort of satisfaction that their capital is active and working towards actually creating jobs or supporting innovation. And that is what we repeatedly hear from some of our family office investors, that they like about what we do, and they like that most of the time, sometimes, our money is not needed, but most of the time our own money's in it, and we're working actively every day to unlock the value, and that's of interest to them.
yeah.
It's not just passive. And I hope in 7 years, four of my, 12 portfolio companies in this fund I'm in, turns into something.
Yeah, so you're not simply doing the Motley Fool thing where you're doing grit
I also know
research.
the gardeners very well for 30 years.
Oh, okay, cool. So they have a fantastic service, but they're not
Incredible,
going
yes.
in. Yeah, but they're doing research, and you're doing more than research. You're doing research, but you're also your own skin in the game. But then secondly, you're coming in helping like an advisor to these actual companies, which we've already established.
That's correct.
Okay, so
Yeah,
so an FO is going to give you 250. You already have 250 in the stock. Let's say I'm a retail investor who happened to have bought that stock on the same day, but I don't know any of you guys. I'm going to ride that up over the next
yeah,
18 months as well, right?
that's right.
Okay, so it's anybody who's in that ticker is going to benefit.
Yeah, and let me just say for compliance purposes that while this is our model and this is our plan, and while it works a lot, this should not be taken for any sort of guarantee of outcomes, but it does tend to work the way we intend most of the time. And we've had some just grossly outperforming investments over the years, and some that haven't worked out. I just felt I should be fair and balanced on that.
Absolutely, because I just
Yeah.
said that I'm going to ride it up, and that implies no downside
Well,
call.
that's exactly what made me think, hey, let's just hold on a second. Let's
Yeah,
just have that disclaimer in there. Yeah.
yeah, I'm with you. Yeah. So then this is maybe a bit more on a personal note. It's business related, but I've been to lots of family office events and continue to go to them. I've never heard your niche. I've never heard
Yeah.
anybody like you speaking at an FOC event,
Yeah.
Richard Wilson's
Yeah.
events.
I've been to a bunch of Richards events. Yep.
Okay, all
Never
right, you're
spoken.
very well
Never
connected.
spoken. Yeah.
Never spoken. Well, maybe we'll meet. I'm
Yep.
going to be in New York next week, but um,
I just quit in
okay,
February or something. Yeah.
okay. Well, I'm curious as to how you're getting out telling your story. Like there's nobody who talks like you at Family Office Club. There's a
Yeah.
gap. What else are you doing out there?
I do go to all the conferences. Now, that's sort of preaching to converted. Most of the people at these conferences are, looking sort of at the same kinds of opportunities and trying to figure out the formula for how do I make the most money out of these clearly underperforming assets. We found that you just can't do that. We don't aren't comfortable with the idea that you can do that passively. Like we feel like we are just not going to invest passively because too much can go wrong unless a steady hand is on the wheel with respect to the capital markets part of what these companies have to deal with. We're in two deals right now. Both companies had record growth and record revenue in the last 12 months. Both stocks are down more than 90% in the last 12 months. And
What do we make of this?
we just got into these because this is
Okay.
we often get the call after they've done something stupid to say I need help. And what happens is because larger institutions really can't participate in this space, and it becomes a retail or a mega retail, ultra high net worth retail kind of market for most of these companies for a while. Um, there are a lot of bad actors in the space taking advantage of these small issuers. Um, some real uh, operators that are just taking advantage of unsophisticated CEOs, unsophisticated with respect to capital markets, not their widget or whatever they sell, and
Mhm.
convincing them to take really bad terms that they don't fully understand that become highly toxic to the cap structure and ultimately to the stock price. And that's, I mean, I could show you 100 in a row that have done really bad deals, and the stocks have just plummeted, regardless of what the company's operations look like.
So this is new information to me. Who
Mm.
would these types of people be, like a lender, or what
Yeah,
type of a deal are you thinking of?
they're all arbitrage players. They're all true hedge, right? Not sometimes hedge funds are catch-all, right? I got under 99 investors and I'm going to be a long only fund. That's not what I'm talking about. I'm talking about guys who are really they are structuring their investment so that they cannot lose money no matter what the stock does, and there are built-in incentives for the stock to go down. And that's the most common form of financing in our business for these small public companies. And unfortunately, there are some bankers out there, investment bankers. We like to consider ourselves old school investment bankers who are trying to add value to fix problems, to help lift all boats. And then there are others who are like, "Where's my easiest ticket to print so I can earn a commission today?"
Hmm. Unfortunately, the world is full of those in my space as
That's
well.
right. Well, yeah, yeah,
Yeah,
I know. Yeah.
yeah, yeah. Wow. So, okay. So if somebody reads your book, it sounds like they're going to learn as much about sales and marketing, maybe not sales, but marketing for microcaps, which then applies universally, as they are about the actual microcap space itself. Is that correct?
Interesting. The first edition of the book, they will not learn those things because a lot of this has changed since I wrote the book. It was always fraught with for these small issuers. It was always fraught with difficulties and landmines and impediments to them executing on their plan. It's continued to get worse. There's been some regulatory constraints that I feel are highly overreaching that have dramatically impacted the liquidity in the market, which exacerbates an already difficult problem. My point is, my first book basically tells you why a stock is cheap and fundamentally cheap. All these things I've talked to you about, stocks going down and such, they're not necessarily fundamental driven movement of the stock. These are technical, and they're technical because of the structure of the financings they're doing,
Hmm.
not necessarily because of poor performance by the company.
Yeah.
So the
Okay.
second
Yeah.
edition is coming out soon. So look for that. That has a lot more of this stuff in it.
Oh, more of the sort of marketing for microcaps.
Yeah, or
Okay.
how why it's important, where some of the landmines are, because
Mhm.
these lenders, lenders have gotten very clever about their how they document their investments. It's they're very obtuse documents that unless you go know exactly what you're looking for, you maybe well, you're certainly gonna miss it, and you're gonna get hurt. Um,
Yeah.
the uh, um, well, what the heck was the question? I forgot the question again. I'm too old. I keep forgetting.
No, you answered it. The question was, does your book give an education on marketing for microcaps, telling their story, which then somebody could universally apply?
Yes, it talks about some of the big landmines that how to go look at a recent filing and get to the bottom of is this a ticking time bomb, and the deal I think looks great on paper. My first book will tell you what looks good on paper, right? The second edition is going to say it looks good on paper doesn't mean that it's even if they perform and execute their plan, doesn't mean the stock's not going to get destroyed unless you know what to look for in the filings.
Okay. Okay. Very interesting. So let me pivot then, and then we can wrap up. But I think the most valuable takeaway for me as a small RIA focused on Bitcoin nearly solely is you've helped reframe my thinking about how I market my business. So I go on podcasts. I have a small TV appearance on Biz TV. Love to be on Squawk Box someday and just continue upwards in that way. What should I do in terms of telling the story of my business? I mean, essentially, I help RIAs and family offices manage and allocate Bitcoin well. We have a downside risk protected Bitcoin strategy that we use. And it's mostly education, filling the gap between where we're at. People don't have knowledge. They need to have knowledge in order to buy, that sort of thing. How should I take what you would teach a microcap company and apply it to my business?
Well, you got to go to where the investors are who can, or your RIAs or your wealth managers or whatever, who can avail themselves of your services or products, right? I don't know where that is for Bitcoin per se, but there's certainly a million lots and lots of generalized investment conferences. What I found though is
Yeah.
that for something like what you're doing. The most effective way, and nobody wants to hear this because it costs a little money, but you sponsor one of these events that's full of investors, and your sponsorship gets you a speaking slot. You know,
Mm,
it's it's so my broker dealer I'm with now, not to make a plug, but to tell a story, is Moody Capital Solutions. Moody's been around about 40 years. We have a conference coming up in about 4 weeks, and every sponsor at a certain level uh, gets 4 minutes to talk to a room full of 500 high net worth and family office investors.
yeah. Great. That's a perfect idea, and I
Yeah,
love it. I'm going to implement it.
yeah.
Yeah,
And then the other thing, yeah, podcast. I do these because I enjoy talking about it, and I do probably one every month or two interviews. You just keep doing it. You just never know who's going to see it, hear it, and of course
yeah,
you can repurpose it for all your various marketing efforts you're
yeah,
making.
absolutely. Yeah. Well, great. What I love about that is that I've already been doing basically what you said, so that's great confirmation. And I wanted to just see if I could tap into your brain to get a little secret nugget, but the secret nugget is, hey, I'm already doing it. So that's great. Love it.
Yeah, there's almost no silver bullets. I was just
Yeah.
talking to some guys on the golf course the other day. We were talking about, the younger generation. They're all looking for what's the secret?
Yeah.
Working half days is the secret. They're like, what? Because yeah, you just got to pick, which 12 hours.
It's a valid point, and I can relate to having come from the mindset of what is the secret or the silver bullet to I have to specialize in what I was built to do. And once I discovered that was Bitcoin, and then once I discovered it was family offices and RIAs, I stopped second guessing myself, and it was no big deal because whether if I get to talk about Bitcoin on a given day, that's a complete day, full stop. I don't care about the results. Um, but the other side of that is realizing that if I were still personally in the retail financial advisory space, working with somebody making 100,000 bucks or a teacher, that sort of thing, it still wouldn't matter. My job would be to market, write books, because the vast majority of other financial advisors out there are not doing it. And I could be spewing commoditized knowledge that seems basic to me, but the fact that I've written it down, boom, that changes everything because nobody else is
It
doing it.
does. That is exactly right. The people ask me about, yeah, boy, how many copies of that book you sell? Like, I don't even know. I take my wife to a nice dinner or vacation every now and then with the money, but I'm that's not why I wrote it. I wrote it because I'm able to say, here's how I think about these kinds of opportunities without having to pitch anybody. It's just like, look, I've written it down.
That's right. That's right. I think one of the things Richard Wilson imprinted or impressed on me is exactly that. When you write it down, it changes everything. And like when I first brought my first book to a family office event, that was just in May of this year, 2026. It was like I just stopped having to do any work. All I did was
Yeah,
talk with guys, write them a little handwritten note, hand
that's
them the
it.
book, and all of
Yes.
a sudden,
Yeah.
yeah, doors are opening that I could have never opened no matter how much effort I would have put in. So it's really like magic.
Have you heard of or been to the Sequire conference in Puerto Rico?
No. What is it called?
Sequire, Sequire. It's at the Hotel Condado in Condado, the Condado Vanderbilt Hotel in Condado. Condado Beach is right outside of San Juan on the north shore of Puerto Rico. It's called the Sequire Conference. It's a lot of microcaps, but it's also incredibly Bitcoin heavy.
Oh, is that right?
Yeah, very, 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 very heavy Bitcoin. Michael Turpin, who wrote, I've got his book here somewhere, I forget what it's called, the Bitcoin Super Cycle or whatever it's called.
Yeah.
He's a friend of mine. He speaks there every year. And there's another legend. Guy wears a cowboy hat all the time. He's a Bitcoin
Oh, is
legend.
that Jimmy Song?
No, 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 not Jimmy Song. No, this guy's he's uh, always wears a cowboy hat. He's got a mustache. Uh, Guy's got no troubles because he's got so much Bitcoin. He's just like living his best life. Oh shoot, everybody knows this guy's name in the Bitcoin space. Anyway, he lives there, and so he's there at this conference. A lot of these guys that were sitting on Bitcoin they hadn't sold, might have $100 million worth of Bitcoin or something. They moved to Puerto Rico. So when they sell the Bitcoin, if they ever do, or turn it into cash, that they got no tax, no federal tax liability.
Okay. Well, that's awesome. That's a great tip. I'm going to look into heading down there.
Yeah, you absolutely should, especially with what you do, and if you position yourself, as Veritas Wealth Management or whatever, as a sort of a buy side. I don't think it costs you anything to go if you're a legitimate, sort of on the investor side.
Okay. Yeah, fantastic. One of the things I'm discovering, and it's the most fun, you mentioned about how guys will invest with you just because it's fun, or that's a huge benefit of it, is it's really fun being a Bitcoin only RIA because there really are no other guys out there doing it. And it's like a blue ocean. So, I mean, just autobiographically, it's a blast. Figuring out how to have fun in business has been the most fun for me.
That's awesome. Yeah, I
So,
mean,
yeah,
see, you're I'm sure making the same sort of case that we do. Is that sometimes we'll talk to a guy. We've been referred to some investor. He goes, "Oh, I got my money with Goldman Sachs." I'm like, "Oh, of course you do. Keep your 100 million at Goldman Sachs. Take three of it, four of it, and come do what we're doing." It's
yeah,
like an allocation that your Goldman guy's never going to do for you. They're not going to do what you do. They're not going to do what I do. They're going to put them in,
that's right.
Blackstone ETFs, Bitcoin or whatever, the Bitcoin Trust ETF or whatever it is.
Yeah, yeah, yeah. That's exactly right. Yeah, I love the idea that it's a sleeve and an allocation. We're not looking at your entire
Yeah.
net worth. It's just write a small check. Yeah. Well, Steve, this has been a lot of fun. Have really appreciated your insights and love that we were able to get connected. So thanks very much.
Good deal. Thanks, Eric.
All right.
All right.
Cool. Well,
Talk to you soon.
Yeah, thank you. I'll edit this out and I'll send it to you, and then we'll just go from there.
So great, man. Good to talk to you.
Cool. All right, likewise, man. Have a good day.
You too.
Okay, bye-bye.